asset performance for 2012. Silver is up about 10% for the year so far, and gold is up about 6%. And Harold, we have a story in the newsletter. Fed's latest easing could cost $1 trillion. Economists are saying that they believe the Federal Reserve will step in and do $1 trillion worth of quantitative easing. And if that happens, the numbers for silver and gold will be a lot higher than 10 and 6%. It will be substantially higher when they step into the market and start doing more quantitative easing 3, without a doubt.
Oh, there's no doubt about that, and that's obviously extremely good news if you're in the hard asset market like gold and silver. But all in all, Monday was a holiday, so the markets were a little slow. A lot of people still getting back, to work and getting back into the action type of thing. But gold is up as we're taping the show right now, $350. We're actually at a very good level in gold. We're at $16.61 right now, with support at around 16.25. So the market's well above its support level and looking much stronger. I'm actually very pleased with what's happening with the gold and silver market so far this year. Silver market's up 22 points as we're taping the show. We're up to $31. So the thing is that where the support in the silver market was at $25 and $26 before, it's now up to $27 to $27.50. So I think that silver's looking a lot stronger. Gold is certainly looking a lot stronger. Oil's trading right at around $100. Very bullish on oil. The U.S. dollar's trading at 80 cents. It was up to almost 82. It came down a bit this week, and the Canadian dollar's trading back up at 98 cents. So we're almost at par with the U.S. dollar. As we're going to move forward, going into the first quarter and first half of the new year, there's so many situations out there that could affect the markets. We're looking at Europe, obviously, with the sovereign debt situation, but that's a long-term situation. It's not going to get settled over the short term. One day the deal's on, the next day the deal's off. So at this particular point, let's just put aside the European issues, because nothing is really going to solve the short-term situation. So again, we're just going to see, bantering back and forth, and I really don't think anything is going to happen in Europe short-term. The U.S. is in just as bad a situation as Europe. However, this is an election year coming up, so it's meant to make things look a lot better than what they really are. So let's put aside all the devastating situations happening in the United States, except what Randy just brought up just now, which is quantitative easing 3, which is coming up, and that could be coming up either in January or February, and that would really set the markets rallying. In fact, the last time QE2 happened, we had a massive rally in gold and silver, and I mean a massive rally, and actually stocks went up at that point also, because what's going to happen is they're going to put about $1 trillion back into the economy. And they're going to try to boost the economy and try to somehow get the housing sector back on track, but that's not going to happen. The housing sector in the United States is still going to drop. I think it's still going to drop about another 20 to 25% in certain areas from where it is at this particular point. So, again, we're looking at a situation where the housing industry is not going to get better. There's just way too many foreclosures, and there's still a ton of these subprime loans out there. So we do anticipate that the price of housing in the United States is still going to drop substantially, even though they're going to try to put $1 trillion back into the market. Again, by putting $1 trillion into the market, why is it bullish for gold and silver? Because of the sheer amount of money that needs to be printed. $1 trillion, we hear it every day now. We hear that the U.S. is in debt for 15 or 16 trillion, that Italy is in debt for 3 trillion, and all these numbers. The fact is $1 trillion is such a massive amount of money that we treat it like it's $1 million type of thing. So you're going to see that printing that kind of money to put back into the economy is going to be very, very bullish for us in hard assets, especially, for the gold and silver market. Now, where we were very concerned going into the last quarter and the first quarter of this year, with the gold and silver market, where it could have taken, a fairly heavy tumble down to possibly, $22 or $23 in silver and possibly about $1,500 to $1,400 in gold. I think that those fears are out of the market at this point. In fact, we're building a very, very strong base, and I do believe that this is going to be an amazing year. We did make our predictions for the beginning of the year, and we're sticking with them at this time, looking that gold is going to hit a minimum of $2,200 to a possible $2,500 on the the upside. So we're looking for possibly a huge move coming in gold this year, and again, it's building a strong base at $1,660 as we speak. The silver market also. Silver could literally double this year. Silver's right now trading at $31. We're predicting that silver will retest the $50 level sometime this year, and if things get as bullish as we feel it will, we could hit a high of at least 60 to 65, which would literally double the price of silver from where it is right now.
And this is another reason you want to own hard assets. Fitch, the rating agency, came out and said, Greece to default. They believe, though, it will be orderly, which I find that very, very hard to believe. Also, Tosca Fund came out and said, Greece, the euro, they're going to exit the euro, and it's going to be catastrophic. They believe that it could provoke greater social unrest, Zimbabwe-style inflation, and a military coup. PIMCO's Bill Gross says Greece to default following downgrades. A lot of people very, very bearish on Greece. In fact, Ambrose Evans Pritchard wrote an article, The World Bank fears Europe's crisis could set off a deeper global slump than the Lehman Brothers collapse. And last Friday the 13th, we saw the S&P, the rating agency, cut 9 Eurozone nations their credit rating. And, it's just a situation where the United States, they have massive U.S. Debt and deficit problems, as we've touched on. And then you have the sovereign debt issue. The housing market is still in a very, very difficult state. And in our newsletter this week, we have some information on jobs, and you add into the picture jobs, and it is the jobs numbers and what's happening in the United States with jobs. It is very, very, very serious. In fact, the pool of Americans relying on government benefits rose to record highs last year as an increasing share of families tapped aid in a weak economy. Almost 50% of the population in the United States that lived in a household received some type of government benefit in the second quarter of 2010. That is a huge statement. In fact, the nation, the U.S., their long-term unemployment situation is very, very grim. As of December, nearly 3.9 million people had been without work for at least a year, and we're still looking. And you can see that story in our newsletter. And as well, Bloomberg had a story that few U.S. cities have actually recouped the jobs that they lost. More than 90% of U.S. metropolis areas have failed to recoup the job losses during the recession that ended, supposedly, they say, in 2009. It's a tough situation. And that's why, Harold, we come back to what we have in the newsletter, and that's that story on quantitative easing. Economists are predicting $1 trillion worth of quantitative easing will be coming from the U.S. Fed at some point, because they see that the same things that we see, and that is the housing market in trouble, jobs in trouble, you have a country in trouble, you have states and cities in trouble. It's a real financial mess in the United States, and if you watch the debates, the only person who's really talking about it is Ron Paul, getting back to sound money principles. Newt Gingrich did mention this week, actually, he was saying that we should actually, in the United States, the citizens of the United States should look at going back to the gold standard. But Ron Paul has been the leader on that, and people are starting to look at gold, Harold, as maybe the gold standard coming back, and it would not surprise me at some point the way the things are headed in the United States.
Yeah, that would be far-fetched, but the fact is that the problems are not going away. It's all caused by greed and stupidity. Nothing has changed. They're still using derivatives. They're still leveraging. The banks are leveraging 40 to 1, so are the stock firms. The fact is that it's greedy and stupid. It's what caused the problems in 2008, and it's what's going to cause the problems in 2012, but on a much, much bigger level. So, again, the comparisons to Lehman are true. It almost brought down the whole financial markets in 2008, but we never learned anything from it because Wall Street is so greedy that that's all they want to do is make money, and it's not representative of what the rest of the United States is like. Like you said before, it's unfortunate the middle class and the people in the United States are suffering due to the fact of the greed and stupidity of the government and everything else going on. So, it's going to be a very interesting year this year. Obama, I think, has about $1 billion in his war chest to be reelected. It's going to be very, very difficult for the Republicans to get back in, no matter how much everybody hates the economy and what's been done. Again, it's going to be very difficult to knock him out of the White House. But it's going to be a very interesting year because, all these situations are hitting all at one time, and, they're trying to mask everything because it's an election year, and obviously they want things to look a lot better than what they really are.